Tamakaze here with a video on how you can automate your trading two different ways. So let's get into it and get the details and show you some fun promotions we have with our official launch of all of our automated trading strategies and algorithms. So we have two different types of automated trading. We have Hydra options and we have EzAlgos. What are they? Hydra options is an option-based copy service where you would automate your account and automatically trade options. You need at least $5,000 in cash to start. It is not customizable. You follow exactly what our account trades. The type of trades we have are primarily swing trades, but we do occasionally find opportunity for day trades. You can scale your account up to 10 times the Hydra options account. We use the platform Collective 2 and the broker Interactive Brokers. So, quick recap of what Hydra Options is. It's a system designed to trade options over a period of time using IBKR and Collective 2. We'll go into more details here on both of these. Just wanted to give you a quick overview. EzAlgos is a futures trading automated service. We recommend at least $3,000 to start, or you can use prop firms, and we'll get into more of that in a bit. It's fully customizable. You can customize it to your needs. It is day trade only. However, you could create your own swing trade systems. We do not offer plug-and-play swing trade systems at the moment, but we'll get into more details on that. It is infinitely scalable. There is no cap. We use NinjaTrader to execute our trades and run the algorithms. So now I want to get into each one a little bit more in details, go through the philosophy, tell you a little bit what they do, and hopefully get you a little bit excited and see which one meets what you would require for your own services. What is Hydra? Hydra is an asymmetric risk management system and strategy where we multiply opportunity through low risk plays. So it's named after the mythical creature where you chop off one head to take its place. Our core methodology, we identify high probability investment scenarios, and then we express those scenarios through construction option spreads that favor risk reward ratios. Each position is sized as a small percentage of our account, so no one position can ever ruin our account. The idea is we're looking for high profitable setups with high risk reward, and then we use a high win rate ratio to multiply our profits. When positions reach maximum profitability, realized gains are strategically reinvested into longer dated options, and those have even better asymmetric risk profiles. This then creates a compounding effect where each successful trades spawns new opportunities with exponentially greater profit potential. So every time we have a successful trade, we're then redeploying that capital to get more and more capital in return, and over time we get a parabolic effect. Now I can't guarantee these results in the future, as the future is unwritten and rules and regulations do not allow that. But that is our core methodology and how we approach our Hydra options. Now let's get into that a little bit more, show you a couple of examples here. These are some examples we took earlier this year for the Hydra options followers. We had an initial position of our Google 2025 call spread. It was a 1 to 4 risk reward with $200 per contract, $800 maximum profit. We then took the profit from that, reinvested back into Google, but we went from a June 25 to a January 26. So then we're looking for a longer dated with a higher maximum profit. So now instead of a 4-to-1 ratio, we have a 20-to-1 ratio compared to our original. So we took that original $200 and potentially going to turn that into $33 per contract. So our risk reward is multiplied through reinvesting. Some of the advantages of Hydra is the risk managed excellence. Through our time of the 6 months we have been running the beta for this, the max drawdown has been 4% of our total account. The compounding accelerations allows opportunities unlike traditional buy and hold strategies. Hydra approaches geometric growth opportunities through systematic profit redeployment. This sounds like a lot of big words. I understand that. Just know that we take the profit and we redeploy it to have even greater profit. So we're reinvesting our opportunities for better return on our original capital. Our thesis-driven precision allows us to build around carefully researched investment convictions. We don't speculate or gamble. Each trade has a fundamental backing and uh, technical backing behind it. So all trades are fundamentally backed and technically backed. Our longer dated reinvestment positions provide extended time frame for these to develop while maintaining leverage efficiency. What that means is we're not day trading options or doing weekly options that have huge decays and huge swings. We're looking for long dated investment opportunities, 1 to 6 months, where we can take our time and let our trades play out and let our thesis come true. We acknowledge that markets often misprice options, particularly on longer dated options. We identify these opportunities and we harvest short-term gains and redeploy those capitals to take advantage of those misprices. It's a self-reinforcing cycle of wealth generation that compounds, unlike traditional opportunities. Now, we've had this out since March. We use the Collective 2 platform, which is a licensed broker that can execute the trades on your account based on what our investment philosophy and vehicle executes. So here are some examples. This is accurate as of today. You can see our month-to-month compounding returns. This is based on a $50,000 account. We are up about $5,000 year to date. If you were to use a traditional $5,000 initial investment, you would be up double year to date on your initial investment. So you can see we had a rough first month in March where we were getting everything set up. There were a couple trades that didn't execute properly on Collective 2. We have it all smoothed out since, and we've been green every month since. So we continue to redeploy that capital, and we continue to improve the return on initial investment. So that's kind of Hydra in a nutshell. EzAlgos is a entirely different beast. Hydra is where you connect your broker account to ours, you turn it on, you turn it off at your leisure, whatever you want. You could set your own risk controls, and it's almost entirely hands off. You could check in with the chat to make sure your positions are being filled like everyone else's. Other than that, there's nothing you need to do. EzAlgos is entirely different because of its customizing approach, its prop firm compliant approach, as well as its day trading approach. So EzAlgos focuses on future trades through the NinjaTrader platform. There's a very diverse offering. Users are able to customize their portfolios, customize their algorithms, and customize their strategies they run for their own needs. Not everyone has a $5,000 account. Some people want to use prop firms. EzAlgos is for you. That means you can then use those algos to capture any market type movements such as trend, mean reversion, chop, news events. We also have custom software, Algo OP, which can analyze your portfolios, show you how all your strategies work together, and even optimize your portfolios to meet your needs. Your needs may be capital deployment, so you only want at any time 10% of your capital deployed to limit risk. Our software can do that. You can say, I'd never want to have a risk of more than $5,000. You can analyze all the trades going back as far as your data gives you, and then you can optimize your portfolio to meet your drawdown requirements. One of the major advantages of EzAlgos is our algorithms are prop firm compliant. What is a prop firm? That is a good question. A prop firm is a firm that will give you money to trade for you, or will give you money to trade for them, and then you split the profits. There are a lot of prop firms where you can go take a test called an evaluation for as low as $30 to $100, and if you pass the evaluation, they'll give you the equivalent capital of $50 to $300,000 depending on the prop firm, and you can get as many accounts as you want across all the prop firms, so you could scale this potentially infinite through that way. There are some benefits and drawbacks through using prop firms, such as you're paying money to pass the evaluation and you have to split your profits with them. And they have a lot of rules that you can research. I won't get into all those rules, but basically they have a lot of risk control rules um, that you need to abide by. The good news is we have all those rules built into our algorithms so that you can apply those rules based on the prop firm that you select, and you can be within those rules that they get into. One of our flagship products I really want to talk about is Z50. Z stands for Zenith. 50 stands for it's designed for a $50,000 and up account. So Z50 is a fully plug and play, already optimized portfolio. It's not just one strategy, it's 11 strategies that have been optimized to capture different market movements so that they work together as a team, or aka a portfolio. Just like you would optimize a retirement portfolio, you wouldn't put it all in Apple, you would put it in 10, 20, 30, 50 different stocks. And maybe there's a couple out there that would put their entire retirement portfolio into one one stock, but you need to be very lucky for that one stock. If you want the best opportunity to be successful, you diversify your retirement account just like we would diversify our algorithms. So Zenith 50 is designed to do that. We have right now Zenith 50 optimized for the Trump presidency. Now, what does that mean? That means we looked at all the data during all the time that Trump has been president, current, in the past. We looked at how the type of markets traded between him, such as him talking all the time, news reflecting his tweets, his Truth Social, all of his news conferences. It creates some radical behavior in the markets that have made traditional algorithms ineffective. By recognizing that, we re-optimized based on his data and have now have a portfolio designed to trade at peak efficiency during his presidency. Now, this is real data I have on the screen. This is data going back to February. I know he got inaugurated in March, but this shows you the performance year to date. We have a drawdown of 1,300 with a total profit of 15,000. So really good risk reward on this. Wanted to show you one of our flagship. I'm not going to get into all the algorithms. We have hundreds and hundreds that you could choose from. You can always ask me if you're looking for certain ones. If you do sign up, we'll get into that. Some of the key advantages of EzAlgos is all of our trades have a defined risk to reward. You know, going into a trade, the profit target and stop loss. It's already defined, it self executes. We do not swing trade. All of our trades are day trades, they get closed out at the end of the day. We are not exposed to overnight volatility, or while the market is not trading, news comes out, we are not exposed to that. All of our trades are rules-based execution, so each trade has a predefined scenario. Just like every day trader should have a system that's repeatable, that's exactly what this is. It's just automated. Our system has already defined rules. It executes those rules systematically between all the different algorithms that work together. I talked about the prop firm compliant already. You can get access to thousands of capitals for pennies on the dollar. For a couple $100, you can get access to a couple 100,000. It allows a very low cost to entry and users to scale their capital faster than putting it into like a $5, $10, $20,000 account. Now you can do both. There's nothing saying you couldn't do both, and I would say you should do both. But up to you and your personal risk reward preference and what you want to do. I talked a little bit earlier about our custom portfolio software. This software will optimize a portfolio that meets your needs. You could backtest all the different algorithms together to see their max drawdown when you run them all together. You could see if they trade at the same time, and you can modify which ones are used and optimize a portfolio that meets your needs. Another nice thing is you can customize, optimize, and backtest your own algorithm. So what I mean by that is we provide the base. You can go and change the settings and potentially find better templates, or even create your own algorithms with some of our software. Allows you to create algorithms with no code. Not going to get into that because that has some deep core features that I don't want to highlight today, but just know that it is possible through EzAlgos to do those things. Now, I know you're going to have a lot of questions, comments. Put those in the video down below. Shoot me a DM on Twitter, shoot me a DM on Discord, shoot me an email, tom@ezalgos.com or tom@thefinancial.cloud. Both those emails will reach me. Happy to answer any questions you have. We have some really good sales going on right now. Wanted to highlight those. All the links will be in the description of the video below. Hydra, we're offering $100 off our first month. That's $49 a month. Then it's $149 a month if you get in before the end of the month. After this month, we're going up to $199 a month, and possibly in the future we'll raise it based on performance. We'll see, but for now, if you get in now, those prices are locked in as long as you stay a subscriber. Our annual plan, you can get a heavy discount on currently down to $1,000 a month. That's $1,800 normally, so you're getting almost a 40% discount. We're raising that to $1,600 at the end of the month. Now, something to be aware of, so it doesn't get blindsided. Collected 2 charges a broker platform fee of $49 a month. We have to use Collective 2 because they're the authorized and licensed broker that executes the trades that connects your accounts to ours. We can't change that. That's a flat fee that is we cannot discount because it's not our platform. Now, EzAlgos current pricing and deals get you your first month for $10, second month for $100, and then the basic pricing is $500 a month. Now, we're doing those discounts so you can get in, potentially get some profits, get used to it, and then you can use those potential profits to self-fund the subscription. We also offer an annual plan for $5,000, lifetime for $10,000. Those links will be in the description below. Now, no video talking about automation would be complete without our disclaimer. Just keep in mind that all the information is presented to the best of our knowledge. We provide real information. Just know that hypothetical simulated performance results based on actual performance results and similar results do not actually represent trading. Those trades are not indicative of future performance. Future performance has the same upside and downside. Have to say that. Hopefully you guys understand. Hopefully you guys enjoyed this video. Hopefully you found something in this video that was interest to you and meets the needs that you would need as a investor over time. And I look forward to answering your questions and giving you more information as more comes out. Thank you, and have a great day.